So you have made it through the first part of the course. By now, you should be able to know what Coinbase is. You should know what broker you're using if you're not using mine. I suggest you do. And you should be familiar with TradingView. With those videos, though, I did reference other videos with demos on how to use it because I'm just teaching the basics on how to at least get into it and get you started. But within these next videos, I will be teaching you how to look for and execute these trades. The three strategies I use that I look for to take trades or stay out of trades. So on this first video, we are going to be going over market structure, which is honestly, very simple to understand. So this video will not be long, but without further ado, let's hop into the charts. And real quick, if you're looking for a new broker or looking for a broker in general, try Liquid Brokers. My favorite broker. They have low spreads starting from zero. They have cheap commission fees. They're a regulated broker as well, so your money is protected. And they have different chartings that you can use and whatever best fits your trading style. Fast withdrawals, fast deposits, whatever you want. So yeah, check out Liquid Brokers. All right, so I have a little graph here what market structure is. So market structure is basically when trend is changing or if we are starting to go into an uptrend or a downtrend. This little graph shows we have a HH that stands for higher high. We have a HL that stands for higher low. Pretty much what this means is when the price comes up, it creates a higher high, comes down, creates a higher low. And then when we go to the next part, it creates another higher high, and we have another higher low. The reason it's considered higher high because this high is higher than this previous high here. This higher low is higher than this previous higher low here, and so on and so forth. We have another higher high, we have another higher low, we have another higher high, we have another higher low. So this is considered an uptrend. With this being an uptrend, we want to look for long or buy positions going to the uptrend. Now, typically when you see the higher lows, the higher highs, the higher lows, the higher highs, higher lows, if you look to the left of it, usually the higher lows will fall into the higher high here, bounce off of it, and keep going up. What I mean is if you get the higher high, then you get the higher low, and you put like a line there to show you, I'll make it white so it's easier to see. You put the line here to show you it's falling into this higher low. And I will show candlestick examples of this as well. And same here. You get the higher low. If you look left, it falls into the previous higher high. Higher low falls into the previous higher high. That's how you know that you are in an uptrend and that you're creating good, well-balanced market structure. And on the opposite side, we create lower highs, or we have a lower low, and we have a lower high, lower low, lower high, lower low, lower high. Pretty much the opposite of the uptrend. So we're in a downtrend. And the same rules apply. When we create a lower high, then we get another lower low, lower high. If you look to the left, the lower high bounces off the previous lower low. So when you see the lower highs, lower lows, lower lows, lower highs, lower lows, it's safe to say we are in a downtrend, and that is when it's best to look for a sell or a short position. But let's go into the candlestick so we can kind of put some examples together so you can see how it look on there. And I already found some examples just to show you. Of course, every example is not going to be perfect, or every trend is not going to be perfect. You get some ugly trends, you get some perfect trends sometimes. For example, here we have an equal lower low here. We get a breakout to the upside, and we have a higher high here, and then we have a lower high here. A little bit of a higher high, then that one, then a lower high, higher high, then we have an even lower high, and then an even higher high there. Market structure is really that simple. It's nothing but higher highs, higher lows, or lower highs, lower lows. That's all you look for in trend change market structure. Higher highs, higher lows, lower highs. We mix this with like support and resistance and stuff, which those are going to be the next videos I teach you. But essentially, look at this video as many times as you need to. Go into the charts, practice looking at market structure before you try to do anything. Before you try to trade, before you try to jump the gun, this is only part of the strategy I use. So go in and try to go in the charts and TradingView, which you should have all that information and be ready to look at charts already if you've been in my course. Go in the charts and look for these higher highs, higher lows, lower highs. Look for these. Try to spot them in these candles. And also, I will reference the video that I learned market structure from. And down in the description, I'll put a link for the video I learned this from. That way, you can not only just get it from my perspective, but you get it from a second perspective as well. But if you do have any questions, just hit my comments. I do my best that I can to reply back to them or answer any questions you may have. Outside of that, the next video, I'm going to put more into this. Like we're going to go over the support and resistance. I think I'll do my next video over support and resistance. Because support and resistance and market structure goes hand in hand, I just didn't want to make this video extremely long. So without further ado, I appreciate you for continuing to watch the course. Hopefully you're getting good, valuable, helpful information out of this. I will see y'all in the next video.